Hey, it's Tom here and welcome back to the channel. Now, one of my favorite investors, Pabrai, was actually recently on a very popular investing podcast, and that is the We Study Billionaires or the Investors podcast. Now, anytime Pabrai sits down with these guys or anyone really for an interview, I find it super entertaining and always sort of learn something. But one of the really interesting things that came out of that particular podcast episode was some actual insights right from Monish Pabrai himself on one of his largest investments, that being Seritage Growth Properties. Now, Monish is not one to typically talk super openly about positions that he owns currently, generally because he may well change his mind, he may well buy more and not want to influence the price and so on. But he spoke really openly about how he views a company, Seritage Growth Properties, and I want to give you the highlights of that in this video today. So this video is going to be broken down basically into three parts. Firstly, I want to talk about what Monish Pabrai actually said. Secondly, I want to talk about an example of one of the properties that Seritage Growth Properties owns that he sort of referenced as part of his investment thesis. And thirdly, I want to let you in on some news and a bit of an announcement, again in relation to Seritage Growth Properties at the end of the video. So definitely keep watching right through to the end for that one. Now, for anyone that's not already familiar, Seritage Growth Properties is basically a REIT, a real estate investment trust. The real estate that Seritage owns was initially spun out of Sears and Kmart before Sears went bankrupt, and Seritage Growth Properties is basically going through this sort of long transition phase of trying to redevelop a lot of these properties into higher rental income, sort of, very high value properties that are generally mixed use in nature. So they're not just going to be one sort of Sears store like many of them used to be. They're going to be restaurants, multifamily apartments, office buildings, a whole mix of different uses for that real estate. And Monish Pabrai talks on this podcast about making his investment in Seritage. Basically, he made the investment after the price had crashed very substantially back in March 2020. The price had gone from $40 or $50 a share to as low as $5 a share. And from what I can gather from the timing of Pabrai's investment, as well as sort of the way that he just spoke about it on the podcast, I think Monish Pabrai's cost basis is probably somewhere between $6 and $10, sort of ballpark, somewhere in that range. Now, of course, Monish Pabrai doesn't just buy into any random stock simply because the price goes down. He really only buys into a stock where he thinks he's getting substantially more value than he's paying for. And in the case of Seritage Growth Properties, I've done live streams with Brad Callender on this before, where we basically went through and analyzed some of the assets that Seritage actually owns. And after going through that analysis, we were able to find that we thought Seritage was trading at quite a substantial discount to its liquidation value. If you are able to just wind up the business tomorrow, sell off all the properties, pay off all the debts, then you would probably get actually quite a significant bump up in your investment returns simply from just winding up the business. Now, that is not the way that Monish Pabrai actually worded it in this podcast. He actually gave some really interesting insights on how he views Seritage over sort of a longer 10 or 20 year type time horizon. And this is essentially what he said. So when he takes a 10 or 20 year view on Seritage Growth Properties, currently that business owns about 180 properties and has been steadily sort of selling off any properties that they view as less attractive for redevelopment. Pabrai basically said that if he fast forwards 10 or 20 years, he really sees Seritage probably only owning about 30 or 40 properties. So he expects the selling to continue of a lot of those sort of non-core assets that don't have attractive redevelopment propositions. But what he also expects to see is that the 30 to 40 properties that Seritage continues to own will be, in his words, ultra prime and will also have undergone significant densification, which the second part of that investment thesis, and an example he gave of one of the Dallas properties, which I want to talk about in a second, is a part of the investment thesis that really I had sort of heard before. I'd heard people like Guy Spear talk about how they thought only a handful of properties would unlock most of the value in Seritage. I'd heard people like Brad even talk about the potential to increase the square footage on some of the properties that they own, but I really didn't view it as an extreme of an opportunity as Pabrai sort of presented in this case. Now, the way I had viewed this redevelopment for Seritage was pretty much purely around the re-rating of rent or lease these kind of prices. Now, what we've seen through the history of the development projects that Seritage have completed so far is that they've been able to basically increase the rent per square foot from maybe $4, $5, $6 per square foot right up to $18 to $23 in most cases per square foot, which is a massive sort of multiplier that they're getting in rent per square foot. And actually in a recent quarterly release, they've actually signed up a handful of new lease agreements with rents per square foot into the $30 range. So significant re-rating in rental prices, and that was really the core way that I viewed the redevelopment prospects for Seritage, and I was really comfortable with, you know, them going through that process. But the densification part of it is really not something I've probably given enough attention to, and after Monash Pabrai sharing this Dallas property example, which I'll share with you in a sec, that's really changed a lot of my thinking on Seritage growth properties and how I kind of view that investment now. So what on earth did Monash Pabrai say in order for me to start rethinking this investment thesis for myself personally? Basically, he said this. He gave the example of this Dallas property, which I'll put some screenshots up here of some of the redevelopment work that Seritage are currently going through. And this is basically the stats for the property at the moment. So as it stands currently, the square footage, as you see it on Seritage's website when they describe this particular property, is currently 235,000 square feet. Now, again, if you look at this in the way that I've traditionally analyzed Seritage and they go through some sort of development project, the way that I would have analyzed that is I would have said, okay, they've currently got about 230,000 square feet renting for, call it, $4 or $5 a square foot. If they can go through some redevelopment, they can then release that 230,000 square feet for closer to $20 a square foot, which is extremely attractive and probably just about anyone's language. But one of the things that Monash Pabrai sort of brought to my attention in this particular example is that it's actually far more attractive than that. So one of the things that is actually happening is they are turning this 230,000 square foot property, which used to be basically an old Sears store, into a massive multi-use property. So it's actually going to have some high-rise office buildings, it's going to have multi-family apartments, it's going to have restaurants, it's going to have some mall space, and the square footage is actually going to grow to an estimated 2.3 million square feet. So you've essentially got a 10x in the leasable area from this massive development. And when you start to run some very rough kind of back of the envelope numbers on how this could impact the revenue for a future, you know, redeveloped property for Seritage, you don't only get the multiple in releasing of $4 or $5 up to $20 or potentially more, you actually also get a 10x in the leasable area from that property. So if you combine a 10x with, call it, a 5x in the rental price, you'll suddenly get a 50x in total rent, which is just monstrous. And when you start to kind of continue down that path of trying to turn that into some property values, the numbers can get quite large very, very quickly. So Monash Pabrai walking through that example on this podcast is something that frankly has just changed the way that I think about this investment and certainly changed it for the positive. Now, of course, that redevelopment is going to cost quite a substantial amount of money, and we're seeing that kind of happen with SRG at the moment as they do have substantial cash burn kind of happening, and it is a little bit of a race against time, frankly, to get some of these projects done. But also they have all these non-core assets which they can continue to sell off to fund the handful of properties that can really create a lot of value for shareholders. So with all of that said, it's really prompted me to do a lot of rethinking on how I start to value Seritage and how I start to think about some of the future prospects. So getting into the final part of this video, I kind of have some news on how we're going to approach that moving forward. And basically both myself and Brad Kellner, stock compounder here on YouTube, who I initially did the Seritage Growth Properties live stream with last year, are actually going to do a second live stream. So we're going to do an update this coming Sunday as I'm releasing this video. It's going to be on at 2:30 p.m. here in New Zealand, which is going to be sometime in the evening on Saturday night in the US, depending what part of the country you're in, but certainly keep an eye out for that scheduled live stream and you'll be able to see what time it is exactly in your part of the world. Now, in terms of what we're going to cover in that stream, first we'll recap sort of the original investment thesis and how our thinking is starting to perhaps change on that for SRG. We'll also talk through some of the other updates, both good and bad. So Seritage, for example, has had a change of CEO in the past few months, which put up a few red flags for some shareholders, so we'll talk through that. Brad's also actually going to revisit some of his original valuation work on getting comps for the properties, and again we'll go through and look at some updated valuations and sort of outlook for how we're currently viewing SRG, going through some examples of the Dallas property, sort of like I just did, but also looking at perhaps another one or even two of the other properties which actually have pretty similar redevelopment prospects, which I've come across already just with a little bit of digging. So keep an eye out for that live stream. That's going to be really exciting to kind of go through with Brad this coming Sunday. So there you have it. Those are some of my highlights in terms of what Monash Pabrai said about Seritage growth properties in a recent podcast. It has really impacted the way I'm starting to think about this investment, and it's going to cause me to sort of relook in quite some depth at this particular stock. So definitely keep an eye out for the live stream. I do hope you enjoyed this video and the initial update before we get into the full Monty with the live stream this coming weekend. If you did, please hit like and hit subscribe, and I will see you in the next one. Cheers.